Hello guys, this is Daniel from Informed Trades YouTube channel. Guys, I'm going to be going over, the Robinhood options challenge, the $50 options challenge that we do on this channel, guys. So this week we are up 52.14%. So it was very, very solid week. Last week we were only up 10%. And I also had a question, someone asked me, if I was like depositing money. No, I'm not depositing to this account. I'm just basically trading the $50 from initial. You can go back to video one. You get to see exactly, me trading it over, and then making profits and just like building up the profits and basically compounding it in a way. So there's no, depositing any kind of money. It's just trading with $50. And then the second week it became 150. And then after it became 200 something, 300. You can go back and watch the entire trades that I've made. There's going to be a playlist in the description. You can just literally just watch every single trade that I've made to get to this point, guys. So you can go and check it out. But last week, guys, I had a position, on UNH and NFLX. So what happened to UNH was that last week I was entering it right around over here when there was like a positive news from the president about healthcare stock that he was going to sign like executive order for hospitals and any medical centers to kind of be transparent and post their costs and things like that. So the stock reacted super very well, and it made a high of around like $274, and I was trying to look at the top, find the top in a way and kind of like short it for a short-term trade. So I got it around like right over here when it pulled it back, and the stock did not perform very well. It was just right in the middle, right around over here, did not go up, did not break down. So it tested to my entry price point. So it did not break down. So I was looking for it to break down. When it didn't, I actually, closed down my position. And when it started to perk up over here, I opened a hedged position. So I became bullish on it. When it was trying to test the highs right around over here, I opened up a bullish position to hedge my downside, in case, the stock continues to go up. I didn't want to, acquire the max loss for the spread, even though it was not that much. I just wanted to mitigate that, so eventually it did not break down. So I just closed out, my bearish position on the stock and just let the other one just work. And eventually, my hedge position, which was a bullish position, worked out perfectly. And, the stock broke out of the high that it made from last week, and it continued to go up to make new highs, so that is exactly what happened, guys. Let me show you my trades for that. So I basically opened up a put credit spread. Basically means a bullish position only received like $19, but I collected all of it, 100% of that, and I closed out the bearish position, the short position that I opened up, which I collected 147. So if I was able to close it even for $146, that means the difference, I will made a profit. But however, if I close it above 147, that means I took a loss. So 147, the call credit spread, and I closed it for 216. So the difference is going to be 69. 260 minus 147 is 69. So I took a loss of $69 and I made a profit of 19. So in total, I mitigated the risk, for the loss of only for $50, guys. So that was pretty good. I'm happy with that. I can't complain. That was a really bad, trade for me, for my part, I guess, shorting it. The market was like trending super high, and then like the president made a news about that. So I was like, I don't even know what I was thinking, dude. But anyway, I was like trigger happy last week because I made a lot of profit. But anyway, guys, but Netflix was an amazing opportunity, guys. So last week when the news came out of, with Disney Plus and having a lot of subscribers, when they gained a lot of subscribers, the stock started to react. So I opened up, last week I opened a short position. I basically was bearish on the stock and it worked out pretty well, but it didn't follow through. So it started to trend up. So what I did was I closed out of my short position and I opened a bullish position since the stock was trending. It bounced up pretty well and it was trending up. And after a few days, after it made around like 295, a news came out that some huge investors are looking to buy into Netflix, some hedge funds also, because the stock is actually at closest to its 52 weeks low, which made around like a 233 at 265, I think. It's closest to its 52-week low, and the high is like 380. So they're looking to get into Netflix due to that, this kind of cheaper. So the stock eventually started to trend up in a way. So that is exactly what we've been doing for the past week, guys. It's been going up, up, up. And every dip that he has was getting bought back up. And we got in right over here at $290, and it went all the way up to 311, But what I did was, I wanted to make another trade on another stock, so I wanted the collateral, so I just closed out the position. But this was the spread that the short position that I got in 134. I collected 134 and closed it for 215. So I took a loss on that. But the bullish position, which was I opened for 115, I collected 115, and I closed out for 9. So I made $106 off of that. So that basically canceled out my losses. So I basically kind of like break even on Netflix, but however, the biggest trade for this week, came from, of course, McDonald's, guys. McDonald's, man, I'm loving it. You know what I'm saying? Yeah, McDonald's is insane, guys. So I was actually, looking, I was bullish on the stock when the stock actually started to climb back up to $196, $95. I opened up a call. I just bought a call option because as I told you guys in the previous video, I'm bullish on the stock. I think the stock can bounce back up to, to $200 eventually by the end of the year. So I just bought a call. However, that did not work out, guys. So I bought it for $43 a call option, and it started to go down, 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 down. Eventually it went down to, excuse me. So it went down to 193.24. So the call, price eventually deteriorated. So some of the calls that I've got were for a strike price of 197, went down to 11 cents, basically $11, and also $13. So at that price point, I grabbed it and I averaged up, so this is a very bad thing to do. However, McDonald's stock trades in a range, guys. So as you can see over here, made a high at that and it just bounced back up. So you can literally kind of sell it when it bounced back up, if your initial strategy is to mitigate the risk. For me, initially, I just wanted to, since my entry price, I got faked out in a way by McDonald's. I thought it was going to continue. That's why I buy a call. I rarely just buy call options because that is kind of suicide in a way. So, I just had to just average up and just close it out when it bounces. So my average became $22, 22 cents basically off the 3 options. And when it bounced back up right around over here, I closed it out, guys. I closed it out and I mitigated and I sold for only for $20 loss, guys. So I could have lost $43, but I closed out for a $20 loss. And since McDonald's was showing a lot of weakness and the volume was going down, guys, while the market, was going down too, the volume was decreasing at McDonald's and nothing was coming in. So I was like, okay, McDonald's, yeah, I was bullish on you, but now, for this next week or something for the holiday weekend, I'm going to be bearish, guys. So I opened up a call credit spread. That basically means I opened up a bearish position and I literally just got on the top, guys. I was super happy. I was super confident in my position. So I collected 175. That is actually the maximum that I've ever collected, from a premium that I've ever collected. $175, guys. I was super, super happy with that trade. And, to the surprise, guys, since I've traded McDonald's for a very, very long time, yesterday I closed it literally at the bottom, guys. So, one of, the legs were in the money, so I couldn't collect the entire, $175. So I kind of knew that. So I was just basically wanted to get out as the lowest as it got, so I literally closed it out. So I collected $148. So this probably made me the hugest profit of the week, and I was super happy with it. And of course, let me show you guys, I bought, the call at the beginning of the week, for $43, I added another one for 13. And when it went down to 11, I added another one and I eventually sold it for 3 contracts. I added all of them for 42, only took a loss for, for $20, and I made $148 off of that. So that was very, very awesome. I was so happy how it turned out. And, this kind of stuff kind of happens. It's rare, but it happens, So the other trade that I made was on AMD, guys. AMD was on a tear, making 52-week highs every week, like for the past 4 weeks, guys. Literally, it was just going on a tear, guys. So what I did, I only placed one day trade this week. It was on AMD. I bought a put when it was pulling back right around over here. I saw it like at lunchtime. So I was like, okay, you know what? I'm just going to buy a put, and it tanked all the way over down. So I covered it when it tried to bounce back up over here. And I made, $8 off of it. It wasn't that bad. I rarely do, I rarely size up and try to scalp it and things like that. But if it was able to continue, I would have held it like overnight and things like that, but I wasn't that much confident. So when it kind of bounced back over here, I opened a bullish position. I opened a put credit spread, and it worked out, So I made $8 and I opened a bullish position on it. It kind of worked out pretty well, but the next day, it kind of, sold off, so kind of sold off. So in total, I basically, took an L on AMD, but only for like $10, I think it was like for only $18, so this was the put that I bought, for 24. I bought it for 24 and sold it for 32, made $8, and I opened right after that. I opened a bullish position, a put credit spread 26, and I took an L on it the next day for 48. So I took $22 loss and made $8. So I basically took an L of $18 off of it. So, I wasn't confident about AMD, so it was all over the place. So I only opened up like one contract. So luckily that is what happened, guys. So that basically, I do not have any positions going over to next week. And basically, this is what happened, guys. We had a fantastic last time UNH going down, 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 down. I closed out the UNH and the NFLX was working out, and I opened, bullish position on UNH. We went up, the McDonald's. I closed them out, opened a credit spread, a bearish position on it. McDonald's to start working out. I got into AMD. AMD worked out until we take a dip over here because AMD sold off. In the morning, I closed out that position. And this is basically what happened to McDonald's. And I just closed it out. So we made 52.14% for the week, guys. Hopefully next week we have a great opportunity, but it's going to be Halloween. I mean, not Halloween, but Thanksgiving. So I hope you guys have a wonderful Halloween. I mean, what the heck am I saying Halloween for, dude? But Thanksgiving weekend, guys. Hope you enjoyed the video. Like the video, subscribe, and I will catch you guys on the next video. Yes, guys, I'm going to be dropping another video today. Yes, I'm going to be dropping a crazy, awesome, fantastic video, guys. So make sure you stay tuned for that. I just had to make this video because I always make update videos about my portfolio, guys. So I'll catch you guys on the next video.